ExxonMobil is forecasting an $800 million dip in the fourth quarter earnings due to falling oil and gas prices. The announcement comes before an earnings season for oil companies amid major changes in Venezuela. Here to talk more about that is Peter McNally, Global Head of Sector Analysts at Third Bridge. Peter, thanks as always for joining us.
Yeah, good to be here.
Nobody's hitting the panic button just yet, are they?
No, I mean, look, it was about a $5 a barrel drop in the oil price that we saw from the third quarter to the fourth quarter. Exxon got a little bit of a tailwind from better refining margins. It looks like on the whole in the fourth quarter, but not enough to offset what was just a weaker, and that's pretty typical that we get a seasonal dip in the fourth quarter just with some weaker demand, in the oil price. But the big picture here is it's not changing Exxon's long-term investment outlook. They reiterated that about a month ago. They're spending a lot of money, relative to recent years, but it more reflects the opportunity set in front of the company today.
All right. Now, you said there's a fairly typical dip. Any outside forces, though, beyond that?
Well, I mean, look, the consensus is that the oil market's been oversupplied, and we would agree with that. Mm-hmm. The doomsday scenarios that have been out there where oil was going to crash into the 40s don't seem to, have occurred. Demand has proved to be a bit more robust, I think, than people, expected. OPEC has stopped increasing production again at least for the time being, at least through the first quarter. So some of those forces working against oil maybe easing up a bit. And now, we've got an even more dynamic, let's call it geopolitical environment in front of us.
Dynamic is a nice word to use there. Venezuela would be one of the dynamics. But what other places should we be looking at or paying attention to?
Well, I would say if we roll back a few years ago, the biggest source of non-OPEC supply was here in North America, the U.S. and Canada, and that has changed. And we've seen places like Guyana grow, Brazil grow. There's a lot more oil, in particular, coming out of South America, maybe than any other place in the world outside North America. So those dynamics have really sort of changed the equation for OPEC and other producers that maybe we were paying a bit closer attention to a few years ago.
And what kind of an impact are they having places like Guyana and Brazil is looking at growing as well? I mean, Guyana's smaller, but they seem to have found their little spot.
Well, they have a great geography, right? It's easy to access both European and Gulf of Mexico markets, right? Refiners need that crude, and both Europe and the U.S. Are just the largest markets in the world for fuels. So being in the northern part of South America there provides a real advantage for Guyana, and it's gone from zero to about 700,000 barrels a day, which is really material. And by the end of the decade, or maybe even sooner, Guyana was on track to overtake Venezuela, their neighbor to the west, founding member of OPEC, home to some of the largest oil reserves in the world. And it has been quite a growth story, and one that Chevron, found incredibly attractive. And that's really the primary driver why Chevron acquired Hess, is to get in on that resource. At the same time, Brazil emerged starting, 2007, 8, 9 as a large potential growth in oil supply. And that's really started to materialize here this decade.
All right. And you mentioned OPEC. They're going to pause at the output hike. They announced that. What kind of an impact will that have?
Well, seasonally, and they've been through this several times, or for a long time. Q1 is a weak demand quarter, so they're pulling back. But after years of trying to balance the market, which they've been largely effective at doing since 2017. OPEC is pulling back on the increases, is that they had ceded to other countries, and regions around the world starting in 2024, really. But we're on a pause right now for those increases.
All right, let's bring it back full circle. Earnings season's coming up. What can we expect?
Look, I think that the outlook for energy companies is going to be pretty muted. I would not expect any big changes to investment plans. The commodity backdrop is just not that attractive for big, changes or upward changes, to investment. That said, here in North America, whether it's in the US or Canada, the oil producers have been able to grind out more efficiencies. Um, and production has proved to be a lot more durable than I think than the consensus thinks. So it's pretty much a status quo, is what I think going forward. As we started with the $5 drop in the oil price isn't going to impact that much when it comes to investment plans.
And with the outlooks, would Venezuela is it possible to even start to factor that in, or no? It's still.
I think it's a little, look, it's a fluid situation. I would put Venezuela now maybe in the category of countries that could potentially grow production in starting late this decade or even beyond. It's the security situation is the biggest problem there in a country that's got a lot of problems. But Venezuela is going to require tens of billions of dollars to develop. But there is a large resource there. There's no, the country has produced a lot less than its potential over the last 25 years.
Okay, we'll leave it there. Peter, thanks as always for joining us.
Good to see you.
Peter McNally is Global Head of Sector Analysts at Third Bridge.